This
Recording.
conference will now be
Yeah, I've
recorded.
started the recording. Yeah, thank you. So the recording has started. Hello, everyone. Today is the SAP product costing introduction. It will be 2.5 hours or 3 hours of workshop. Thank you for patience in
Mhm,
advance. Okay.
mhm,
So I have over 24 years of experience, so 5 years into core accounting, financial accounting, 19 years in SAP. So I have worked with various industry verticals such as automobile, steel, pharma, retail, etc. I have worked in every kind of constructed DevOps, agile, uh, then waterfall methodology, agile methodology. Coming to SAP, I have handled everything like a migration project, brownfield, greenfield, rollout projects. All of these I have worked on, and my specialization, is in controlling, product costing, actual costing, material ledger, etc. All of these, and complete
mhm,
integration also I'll be covering. What I will cover, I will share it with you. Firstly, why learn product costing? You're seniors in industry with 10 to 12 years of experience. I need not tell you. Today, whenever I we search for costing consultants, we hardly find any. Right?
mhm,
If you interview at least 15, 20 people, nobody understands costing. Everybody says I am comfortable with finance. I'm talking about people who are been there in the industry with 10 years, 13 years, 15 years experience. I'm not saying there is zero presence, but there is very limited presence of a good costing consultants. So that is where there is a vacuum for us to fill, and a natural progression for a financial accountant is to upskill into controlling. Yeah, there are modules like TRM, group reporting, etc. You can go, right? And I understand TRM also. I understand group reporting also. The product costing is for somebody who is having this intuition towards numbers, right? Who wants to do some forensics into what is eating away the product margin, right? What is hitting their margin a lot, right? How do we price products, etc. In couple of slides down, I am sharing this. Another reason why product costing and material ledger has this is because previously in SAP ECC, which was more denormalized structure, running a COPA report itself used to take huge number of amount of time. So we used to take this information into downstream systems, right? Like SAP BW, Cognos, etc. And then we start building reports in that one. And there is a huge amount of data processing that happens, etc. Right? Zero FI, GL1, etc. There are a lot of extractors through which we take the data, etc, right? So that is where now with S4 HANA columnar database, a lot of this data is sitting in S4 HANA itself, and that is where SAP has enabled a lot of these material ledger features, new features, including enabling the actual costing, etc., which is performing very fast because of the HANA database. So as a result, a lot of people are now trying to explore material ledger. Another reason what is happening world over is that with 2027 S4 HANA, sorry, ECC license is getting over, right? ECC support from SAP is getting over. Initially, it was there till 2025. So there are a lot of people, the last minute bus catchers kind of thing. A lot of companies are now trying to, move to S4 HANA. Some of these are pure migrations. Some of them are implementing greenfield because they want to take this opportunity to fix the anomalies of legacy, right? They want to go with a greenfield kind of construct. In whichever way, they want to explore the material ledger, the possibilities that HANA is offering them on material ledger, etc. Right? So this is another reason, right? With this particular training, what we have to, for whom is it? I would say for anybody with a FI background, people in production planning, etc. This particular course will make a lot of meaning for them. But a bit of knowledge in FI is always good. But when we go through the settings, etc., you will see that other than the chart of accounts, there is no heavy lineage towards FI, except that we use GL accounts. In product costing, there is not heavy usage of FI, right? Coming to course curriculum, the course is divided into two constructs. So one is the foundational aspect, the other one is the expert level, right? In the foundational, what we will cover, we will understand what the enterprise org structure. We will go through the logistics org structure, general ledger accounting, document splitting. Tax on sales and purchase is not required for our construct, but if that is required, we can do. It's 4 or 5 settings that we have to do, right? Then we will go into integration, how the product costing or right is integrated with the general ledger, how it is integrated from an SD perspective, how it is integrated with perspective, how it is integrated with CO, FI and CO, how it is integrated with production planning, right? How what is material ledger settings? Many people know that there is something called material ledger, but what exactly is material ledger? Oh, material ledger, enables multi-currency, multi-valuation. But what is why multi-currency? FI itself is giving me 10 currencies. Then what is multi-ledger giving me? Right? 10 currencies itself is huge construct. I mean, why would I analyze almost 10 currency? Why would I require? But let's say 10 currencies FIR is offering. What is the need for material ledger to give me three different currencies? Right? Then what is multi-valuation? Right? All of these are deep core subjects where we will in great in depth, right? Then
Uh,
FIMM SD
sir,
integration. Yeah, yeah,
sir, sorry to interrupt you. Are you presenting something?
yeah.
No, we can't
My
see the
screen.
Uh,
slide.
yeah, screen we could not
Oh,
able to
okay.
see. Yeah, yeah,
One
Oh,
second.
okay. See,
One second.
I'm new to this go to. Thank you for letting me know, Iraj. So,
Yeah, now
yeah.
we can
Now
see.
we
uh,
can.
so I'll
Now we
go
can
back
see.
and I'm very sorry for that. So it was introduction. Then I
Mhm,
covered about myself. Then I spoke about
mhm,
why learn product costing. So I have put
mhm,
some reasons here, right? But you are already having the need. You know that I don't have to again resell why you need to scale to product costing, right? For whom is it? Again, that is covered here. Then course curriculum. I am going into the course curriculum here. I hope
mhm.
you are able to view my screen now. Can you
Yeah,
view my
we
screen?
can.
Yeah, yeah,
Yeah,
yeah.
Yes, yes,
yeah.
yes.
So here I have covered org settings, and now I have covered I have just read those topics. Okay. Where is
Mhm,
a highlighter laser pointer here? So integration I have addressed. Then once we complete the integration, we will go into master data. From a master data perspective, we will go into what is profit center, cost center, material master, business partner, bill of material, activity type, work center, routing, update production version, open close material ledger. Then we will touch base with cost component structure, costing variant, variance and settlement, WIP configurations, template allocation, overhead costing, splitting structure, planned activity rate, initialization of stock, material purchase. Then in material purchase, we will go into standard price, moving average price, etc. What is preliminary cost estimate? What is simultaneous cost estimate? What is actual costing? Then marking and releasing, settlement, execution of work in progress. Then once you complete this, you are good to take up any product costing assignments. That is how I will train you, and I will assure you that you will be able to do any of these things is very seamlessly. And I will tell you the logic behind each of these. Why what is getting impacted, right? Those are very very intrinsic topics which I will explain in very great detail. Then there is another set of thing which comes under the expert level, okay, where we will be doing actual costing, right? In actual costing, we will cover actual activity rate, okay, why we have to do the revaluation of production orders, variance and settlement, costing cockpit, month end costing run, right? Then we will touch base on other methods of product costing like product cost by period, product cost by sale order. Then when it comes to mixed costing, let us say you have a scenario where you are getting the raw materials at two different prices from two different vendors, but you can't leave both the vendors. You want to have a vendor mix ratio, right? So then what will be the optimal mix, right? Whether it can be import versus domestic raw material, right? If you want to do the decision for every product, we will have only one standard cost estimate. But with the help of mixed costing, for the same material, we can have two different standard cost estimates at valuation type level. Right, and then you will know if you use raw material which is of import material make, what is the impact on finished good. If you use domestic based raw material, what is the impact on finished good. When I say impact, what is the cost of production of finished good, right? Similarly, make or buy, we say, right, semi finished goods, for example, right? Do you want to make it in house? If you want to make in house, what percentage of it you want to make it in house, or you wanted to buy those semi finished goods from external market and directly consume it, right? This is another example of mixed costing. Then let us say you have set up your plant some 30-35 years back, when processes were more analog, right, and more mechanical, involving human intensive operations. Whereas now, I mean, even in 2014, when I visited France, I saw an complete industry. There was not even a single human factor involved, right from the start of the production till the packing. It was completely robotized. So there's no human element itself, right? Except that the stores manager has to issue the stores and place it at a place, and then the robots completely operated within the factory with robots. So now if you have two different assembly lines, right, one, you cannot decommission your setup because you have a lot of labors, then there will be a labor unrest. You can only decommission it over a period of time. Then what is the optimal mix, right? How much of the production should happen in your old assembly line versus how much you wanted to do at a new assembly line, and get a balanced ratio between both these assembly lines. This is something you can do through mixed costing. Here I will pause for a second and take any question or feedback. Anything you have, any point till here?
No,
No,
sir. Clear.
Rajan, you can continue.
Okay, okay. Then we will look into splitting. We will look at cost splitting, production variance splitting. How much ever you are in control of numbers, you still might have physical stock variances. Then you might have some usage variances, etc. At the end of the month, right? How do you apportion them back to the production? So that is something we will look into, the usage variance splitting. Then joint production, right? Then we look into subcontracting, special procurement. Then the most complex topic here is the multi-valuation. Multi-valuation, if you miss the bus in greenfield, you cannot implement multi-valuation, right? Multi-valuation is a very, very good subject where you can even generate the group reporting using the material ledger, right? In group reporting, I am presuming that you already understand some amount of group reporting. Group reporting will definitely consolidate the legal balance sheets. It will help you do the intercompany eliminations at legal entity level, that is company code. It will also help you do the eliminations at profit center level. But what if you want to do eliminations at the brand level, divisions level, right? At a further granular level, then that is not possible, right? Then cross company code costing. You are doing, for example, steel industry where I was working, there were 5 different legal entities. Legal entity was producing only till the what you call processed steel, molten. After that, the coils, bills, blooms, etc., they were being produced into another legal entity. So how do I get in legal entity 2 the cost breakdown of the legal entity one's SFG? So SFG of one legal entity is becoming the input of the second legal entity. But in second legal entity is also belonging to my group only. In my group, legal entity 2, I wanted to see the cost breakdown of the SFG. So what was the raw material cost? What was the labor cost? What was the machine processing cost of the SFG? So how this SFG cost gets passed from legal entity 1 to legal entity 2? How does the cross company code costing happen? So you will be able to see there. Then we will look into margin analysis. We will look at certain features. What is operating concern? May I ask you, what is operating concern according to you? I can call out names if you help. If you answer, the understanding will be more firm. That's the only request I have.
I
Harish, would
think
you like to take a step?
operating
Yeah,
concern is
please
the
go ahead.
highest hierarchy in the controlling.
Is this the Rishikesh?
Operating concern, yeah, Rishikesh, yeah.
Yeah,
Operating concern is
very
the
nice.
highest hierarchy in the controlling, and within that we can create multiple controlling areas that can be helpful for the managing cost and all.
Excellent. But why do I need it?
So
Okay, before that, we'll
COPA
ask
and product
others.
costing,
Yeah, go ahead.
for COPA and product costing, it's mandatory.
That is very good. But why is it mandatory? What is something product cost operating concern is enabling, which I cannot get through FI?
No idea, sir. In detail, no idea.
Yeah.
Because
So,
I told you, right? Yeah, is correct,
yeah.
sir.
So operating concern helps you, understand your profitability you over marketing segments or marketing dimensions, which is not possible from an FI perspective. In FI maximum, what do you have? You have general ledger, GL account. By GL account, you
Right,
can generate a trial balance, you can generate your income statement, you can generate your balance sheet, right? These are the things.
right.
Further, if I want, I will have to make use of profit center. Let me just open an Excel. Okay, here I'll take a, give me 1 second. Uh, I have to open the Excel, right? Excel. Now this is going to become a little more interactive. If you participate, the understanding will be more better. Okay, I'm again sharing my screen. Okay. Let's say your company says that your client says that they wanted to have balance sheet and profit and loss across multiple dimension. For example, they will say legal entity wise. Okay, they need profits. Sorry, P&L, P&L, or shall I call it income statement? Whichever one, it's the same thing. P&L, income
Right.
statement, and then they need the financial statement or the balance sheet. You can call it balance sheet or financial statement. Okay. So what are the dimensions on which they need this one? They need legal entity wise, right? They need state wise. They need let's say or state wise, brand wise. They need store wise. They need distribution channel wise. Okay. They need based on men, women, uh, or let's say this way. Yeah, men, women, or let's say kids wear. Okay, it's a retail, or else in the automobile I was working, they were making engine valves, brake liners, etc. So they used to make engine valves and brake liners for tractors. They were making the same thing, some of these engine valves for the passenger car like Tata Indica, Maruti Brezza also, they were making brake liners, etc. Then they were making the same thing for trucks, multi-utility vehicles, right? Then SUVs, they were making it. So now when they sell based on product group also, they wanted the P&L and balance sheet. So required, I'll say REQD. Is it fine, or do you want me to write required completely? Okay, let me write completely required. So your business says they want it like this, and then they want luxury, mastige, and they want let's say classic. So some products like Kajal, Shingar, etc. are very classic, but some of the products are luxury, mastige, etc. So they wanted that way. They also wanted brand wise, right? Then they wanted product group wise, leather, okay, cosmetics, okay, and then they wanted leather, cosmetics, electronics, okay. This is one way. Then they had another division, right? In cosmetics itself, they had something like personal care, beauty, hygiene. I'm sorry, why is this battery is dying down? Give me one second. No, it was supposed to be on. Okay. Are you seeing my screen? I hope I am sharing my screen. Can you see my
Yeah,
screen?
Yes,
it's
yes,
visible.
Yes, sir.
Yeah.
Yes, sir. It's
yes, yes.
visible.
Okay. Okay. Now, all of you are finance practitioners. I need your help and tell me how will you provide me all of this? Okay. I need these are required. Okay. I'm only trying to explain operating consent. And this workshop will go for another 2 hours possibly. So I hope you all have time. So I will call this dimensions. Okay.
Mhm.
I can add couple of more products. They also needed vendor wise. They have some premium vendors like they had HUL and L'Oreal. Okay. Right. All these things. They needed both balance sheet and P&L. Now, how do you enable this? Is it possible to enable this? Is it not possible to enable this?
In few cases, we can, but other cases, even I'm not sure because we have not
But
done that detailing.
uh,
Yeah.
Rajan, these are the business types for single entity. I mean, single entity is into legal, state-wise, brand-wise, and then store-wise. They are following for the single entity only.
They had 16
I
legal
mean,
entities, 14 or 15 legal entities. And the legal entity
okay,
doesn't
so
matter, right? Legal entity
yeah,
doesn't matter
it,
here.
it doesn't matter,
Mhm.
but my nature of business is same. Then I can create segment profit center and all, right? For the same nature of business. Just like suppose
Okay,
I am into the beauty care, cosmetics. So I can create same segments or profit centers for that.
very good. You are making an attempt. So what is the guiding constraint, right? What is the constraint or limitation that we have in SAP? First thing is which objects provide us P&L and balance sheet? What are the SAP projects that provide me P&L and balance sheet?
So GL, cost center, profit centers.
Can I get profit center balance sheet on cost center?
No, I cannot get on cost center. So I can get it through GLs and profit centers.
F.08 or F financial statement version we run, right? On what dimension
Right.
you can run it?
Business area.
Very good. Excellent. Business area. Then
Business area and
Harish and Avnesh, if you answer, I wanted to help you to upskill as a solution architect. I have been solution architect in multiple projects. These are some of my experiences which I am sharing with you. If you contribute to this session, no, it would be helpful for yourselves and for me.
Yeah. Yeah.
I mean, you can easily tell the fundamental thing which gives us balance sheet. Shall I say company code?
Yeah. Company code. Yeah. Company code
so
was the
this is
business
the
area.
highest hierarchy, right? Company code I can get here. Company code I can get. Business area I can get.
What else?
Segment wise.
Very good segment wise.
Mm,
Then profit center wise.
yeah. Profit center.
Yes, so when I can get segment, then segment is linked into profit centers, so I can get profit
Not
center wise
necessarily.
also.
Not essentially. That is the catch. If you group profit center into segment, you are losing one
Mm-hmm.
dimension. For example,
Mhm.
if I say profit centers
Okay,
are districts, right? And my
okay,
segment is, let us say, states, then I lose the segment as an object. So if I don't map a segment, I can use a Z table somewhere where I will have some other data dimensions, right? Data values, and I can populate using an enhancement in my transactional level. We have this limitation. See, you understand here there are 10 different dimensions on which you have to give them the balance sheet, right?
Yeah.
Without this, it is very difficult. Almost 11 objects. I had somewhere around 14 objects, I believe. There are two more objects. Style also was there. Style. Okay. So this is the catch. So now if you say company code is mapped to legal entity, right? Company
Mhm.
code is mapped to legal entity. One object is gone,
Mhm.
all right? One object is gone. Sorry. And let's say state is business area.
Yeah.
So business area is gone. These days, income tax department is asking state-wise balance sheet also, right? So let's say business
Mhm.
area, SAP has been saying that do not use business area. They are not going to invest into business area. But there are a lot of projects. Even this year, I have handled multiple projects where client themselves have gone ahead and used business area, right? Next, coming to profit center. Profit center and segment. Where would you like to map segment?
Segment brand wise.
Brand wise, should it be segment? I might have 200 brands that I am dealing with,
I think
right?
product wise we can map here for segment because there is a separate segment reporting of the requirement also. So we can map products under the segment.
So that is a decision we ask with them, which is most important in the priority, right? They
Mhm.
said brand wise is definitely priority for them. Okay.
Yeah.
Then
Right.
store wise they wanted. Okay.
Mm.
So I can make store wise, I can make store as a profit center. In profit center, there is a location field. In that location, we can map a state. That's possible. Then using some
Yeah.
lookup table, right, we can bring that balance sheet, right? That is possible. Another way, distribution channel means this is very critical. All their business unit is divided like this. So it is retail. They sell through retail. They will sell it
Right.
through online. E-commerce is a very important platform for them. They sell it
Mhm.
through pop-up sales. When you say pop-up sales, one unit website, right? They have multiple websites, right? For a men's product, they have one website. For cosmetics,
Mhm.
they have one website. So if you go to cosmetics and search for a men's product, that will lead to the men's page. But then the other unit will say, hey, you got your sale because of me. For example, that gadget 360, if you search for a comparison of two mobile products, and if you click Amazon, and if you go and purchase in Amazon, that URL has a link saying that this sale was a result because the customer came through Gadget 360 and they make some money. I don't know exactly whether Gadget 360 makes some money from them through that contract, but that is how sales happen, right?
Mhm.
Then another sale is that I can sell it on my own website, or I can go to Mintra.com, Craftvilla.com, what is that, Flipkart, Amazon, etc. I can sell. That's called marketplace,
Mhm.
right? I can sell it through exports. Okay. For them, this is very, very critical, double critical, right? I will say, I'll bring this information through segment. Okay. Now segment is over, right? But what
Yeah.
about the other things? Okay. This question, I think all of you will answer. What is the maximum length of profit center? Profit center length?
Mm. 6 to 10.
Only 10 digits. Maximum is 10 digits,
Yeah.
right? So
Yeah.
there
Yeah.
is a way, I will say the first four digits, I
Okay.
will
Got it.
map through some dimension,
Mhm.
dimension one.
Mhm.
Then I will say fifth and sixth digit is dimension two,
Mhm. Mhm.
right? 7th and 8th of digits, dimension 3,
Yeah.
right? Now look at the play. See, I'm only trying to help you understand what is operating concern. To make you understand operating concern, I am going through all of these things to you.
Yeah. Yeah.
Okay. Now you tell me, what do you want? What is the next immediate important priority? Okay, before that, when I say distribution channel is segment, then I should not put in profit center master data segment field. Segment becomes an independent dimension.
Correct.
Correct? Right. Then how previously in my master data, the moment I enter profit center, based on the attribute, it will populate my segment also. Now, if it is not getting populated, every time that you do FB50, every time you do F-02, or you do ME21, and if you do MIGO, if you do sale order, VA01, etc., wherever you are doing transaction, it has to go and determine the distribution channel. It has to go and determine the distribution channel. Distribution channel is coming from sale order, right? Based on the sale order, right? Based on the sale order only you will get distribution channel. Now your question will be, okay, if it is sale transaction, I will get two set of transaction. What is a sale transaction? One, I will have the revenue side of the transaction. The other side is the inventory side of the transaction. So COGS is debited, debit your COGS, credit your what you call inventory. So this is the inventory side of the transaction. So in this particular transaction, I am getting the cost as well as I am getting the revenue. So I can see the what is the distribution channel through which the sale order is made, and I can apply it into the segment. But how will you do this distribution channel for FI purchases, asset purchases? You are paying salary to your staff. That staff may be only meant for leather products, right? They may be only meant for pop-up sales or marketplace. But how will you distribute it? Salary of a person, how will you distribute it across dimensions of these distribution channel? This is where you will hold consultation with the team. You will have to arrive at an algorithm. How in each of the transaction, etc. How will you derive this particular distribution channel? So that is where enhancements has to be written. Now the next thing they are saying is they have 2000 stores in India. How many stores they have? 2000 stores. Correct? And then they say I have 200 brands. I have 200 brands. If you go with this logic, how many profit centers will you have to make? If every store sells 200 brands and you want to measure the profit, right? You have to determine your profit. Then it becomes 2000 into 200,
Yeah.
Right.
right? So let's say this I am mapping to profit center, store and brand, part of profit center, part of profit center. Okay, menswear, women's wear, or let us say already brand is there. Why did I write it again? Okay, now imagine I have 2000 brands or 1500 brands. Let's say we are dealing with 1500 brands. Then what happens? Then it becomes 2000
Into 5,000.
into 1500.
In
So how much is
30 year,
this?
30 year.
30 lakhs. 30 lakhs of
Mhm.
profit center. They will send you out of the project if you do the recommendation, right? So here is where you will do further analysis. See, enterprise org structure itself is very, very, very important, right? Then we started trying to understand what is their requirement, what exactly is their requirement, why they are asking balance sheet. Why will somebody ask brand-wise balance sheet? Balance sheet means what? Your long-term assets, right? Your current assets, accounts receivable, prepaid assets. Why will I have brand-wise assets, right? For example, bank balance. Can you divide your bank balance based on brands? So that's when
No.
we started asking, they said that, see, we don't want for all the 2000, 1500 brands, but we wanted to do for the top 25 brands only. They agreed that they want balance sheet for top 25 brands only. So now look at it, the profit
So,
center comes down to 200 into, yeah, please tell me.
so basically this is as per segment reporting requirement, right? Because in segment
Yes,
reporting, we have to report at least 10% or 15%, whatever. In India, we have to report at least 10 segments. So you
that
have
is
to split your
IFRS.
profits and yeah,
So
correct.
IFRS is saying that whenever your business is above 1 million or something, your revenue, there
Correct.
is some threshold factor there, right? You will have to give me a separate number. But forget about IFRS.
Segment wise,
You are
right?
running a
Segment wise
business.
separate number.
You are running a business, right? This particular business. Are you not interested in knowing which particular brand is giving you maximum profit?
Correct, correct.
Okay.
We should know.
You want to know whether it is the luxury segment or the classic segment which is giving you more profit?
Hmm.
Now, store wise, you have your own stores. You have your own stores. Then you have your franchisees. Okay. You have your kiosk, right? What I am trying to tell you here is that even though we can propose profit center, right? We'll have to arrive at the optimal. What is the best combination in which profit center can give? Apart from this, profit center group also can give you. Profit center group also give, right? This is not the dimensions, but profit center can be grouped. So you can generate a balance sheet at profit center level. You can generate a balance sheet at a profit center group also, right? That dimension also coming. So if I say I will put products in leather, cosmetic, electronics, or then again men's, women's, I will group it. So it's not possible that way. So there should be some logical grouping. Then the number of profit centers will reduce. Now, the key point that I wanted to tell you here is that when we discussed with them, we were able to convince them that, and we were able to help them understand that they don't really need this particular balance sheet. So, balance sheet not required. Balance sheet again. Why if I have 100 vendors, why will I create my balance sheet for the purpose of the vendor? The maximum what a department would like to know is that for which vendor how much I have to pay, right? What am I due to a vendor? So again, when we understood working capital requirements, etc., here also balance sheet was not required. Even for style it was not required, right? But they said that okay, I agree, you don't give me for these 5 things, you don't give me balance sheet. So they just said that I don't have something that I can strike it here, I'll put it as a gray color, which they agreed they don't need it. But they are saying they wanted profit center here based on division category. Division, let's say this is called category. I'll call it category wise. Okay. Then I will
Yep.
call, okay. So now look at, for example, I am paying salary. Okay. Now I am just going a slide division. Rent. Okay. 3,50,000, 1,80,000. Okay. Now what happens is for these dimensions, men's, women's, kids wear, all these things, I will say I will give it through COPA. I will give it through COPA. COPA is operating concern, right? So for this, all of these where balance sheet is not required, I'll be able to provide you P&L. I can provide you P&L at gross profit, contribution margin level, net profit level. But only thing is that, let us say you have an internet bill of 35,000, 38,000. Okay. This is the GL account. Let's say GL account. This is 400,101. This is 4,403,2,109 GL account number. Internet bill is 402,128. Okay, let's say this is the bill. Now during the month end, they have to ensure that if you want to make this profit, these are all expenses. These are all expenses, right?
Yeah.
They have to
Yes,
ensure that
yes,
they are breaking this salary across all these dimensions. That I'll show you. For example, this internet bill. So they will have to write. They have to in the month end COPA allocations. They have to break it to men's. Okay. Then it is product group leather. Then brand is, let us say, Lee Cooper. Okay. Then this is Mastage product. So this internet bill, they will have to, let's say 180 based on revenue or some ratio, they will have to do. Same internet bill, again, they have to go men's. Belt is Rexin belt. Okay. It is local brand. Okay. It is a classic product. Then you will apportion based on the proportionate of sale 72 rupees. So this 38,000 amount that you have here, you will have to split it in so many number of lines across so many columns. If you want style also, style, all of these category, you will have to divide it. That is where you are getting operating concern. Clear?
yeah,
Yeah.
Yeah. So many people say I controlling area is assigned to operating concern. All of these are okay, fair enough. But the real aspect is that operating concern will be able to give you profit across marketing dimensions, right? Now look at it in India, in UK, in Middle East, in USA, in Africa, right? I am having 7 legal entities. So I have 5 legal entities here in UK, 2, Middle East, 2, USA. I have 3 legal entities. Africa, I have 4 legal entities, right? Like this, I have different legal entities, right? Okay. And across the world, I am selling the same products, same brands, etc. through my online platform, etc. At the legal entity level in India, suppose say I have 5 legal entities level, each legal entity will give me P&L only for that particular legal entity level. But whereas operating concern will give me, for example, brand, I will get Lee Cooper brand. It will cut across all this EMEA, India, Middle East, all the legal entities, and it will tell me what is the profit. Are you understanding what I'm saying?
yes, Raja.
Because brand is a dimension, and that brand dimension, where am I getting? I am getting through operating concern. And the operating concern, when we say it is at the highest level, what does it mean? It means that, see, legal entity, let's say legal entity, 5 legal entities are there, number of legal entities. Okay, let us say legal entity 1, will it show me the profit of legal entity 2? Will legal entity 1 show me the profit of legal entity 2? If I run a balance sheet and P&L based on company code, right? Will it show me the profit of another company code?
No.
No, right? Agreed.
No.
But
No,
I wanted to
no.
know in all these legal entities, how many legal entities are there? 5 to 2, 9 plus 3, 12 plus 16 legal entities are there. In these 16 legal entities, how much of Lee Cooper brand I have sold? It doesn't matter whether I have sold in Abu Dhabi, I have sold in Johannesburg, whether I have sold in Germany, it doesn't matter. Tell me what is the profit I got by selling Lee Cooper brand across the group. How will you get that? At the operating concern level. Because I am determining this brand at operating concern level, those dimensions are cutting across legal entities. For them, legal entities does not matter. Only when you run the report along with the brand, along with the company code, you will get only for that slicing and dicing. Is this clear? Do you have any questions? Because we have not yet got into product costing. I have another 1.5 hours of workshop, right? Are you understanding what exactly is operating concern,
Yes, Raja.
right? So that foundation in many projects, enterprise designing the enterprise org structure takes 4 to 6 months. There are so many challenges. Okay, nobody will be able to compromise. No, I want to check my P&L, etc. Finally, we have to negotiate with them and agree that we have only 4 objects for balance sheet, whereas I can give you everything else using COPA, using the operating concern. Globally, I am getting to know what is the profit generated through my Lee Cooper, L'Oreal, okay, Lakme, Bobby Brown, something, Mac. Okay. If I want globally, what is the menswear profit? Men's, women's, kids wear, across all legal entity, kids wear. Okay. Across all legal entity, globally, what is the revenue? What is the profit generated across the entire world for by doing the business of kids wear? It can be leather, it can be plastic, it can be toys, it can be anything. It doesn't matter. But that is something which operating concern helps you achieve. Am I clear till here?
Yes.
Okay. Is it possible for Avnesh to speak now, or are they still occupied?
Maybe he's having audio issue, I guess.
Anvesh, Anvesh, are you in the office as of now? Anvesh.
No, I think he messaged in the text chat. He's having some microphone issue, so he's unable to speak.
Okay.
He messaged in the chat
Okay,
window.
Okay.
no problem. No problem.
Okay.
See, this what I am sharing with you is my several years of experience, and I'll be
Mhm.
happy when you get the best out of me. That is the reason I am asking you this question. Hope you guys don't mind. Okay,
No,
now
no,
we'll
sir.
go and understand.
Yeah,
Is it helpful to you?
yeah, really, it's helpful for us.
Yeah.
Yeah, it's really helpful.
So
So
in
minute
any
level we can
greenfield
Basically, I
project,
can
understand.
say it's nice. It was nice lesson for operating concern. It was very
Mhm.
good.
yeah. Now I'll explain you every topic at a very logical level. You can ask me in this any topic. I will go blindly and I can explain you every topic at a great length. All right. So it's not that I will give you coverage of only day one and day two. Any topic you can ask. Now, what according to you is product costing? According to you, what is product costing?
Mhm. The product, the cost incurred for creating one product.
Who's that? Who answered?
Harish.
Excellent. Very good. So, what is the cost to make a product?
Yeah.
Very simple, right? That's product costing. Tell me what we will make. We'll make a cosmetic, lipstick, or any other product you have in interest. A tablet
Mhm.
from your project. From your project itself, you give me an experience of any product which is being made.
So you can take an example of cement,
You have cement product. Okay, tell me. In cement, what are the raw materials which is going into making cement?
lime,
Fly ash,
fly ash,
limestone,
Okay.
concretes.
So all these are raw
gypsum.
materials, right?
Yeah, yeah.
All these are
Right.
raw materials. Very wonderful. Now, after you get these raw materials, right? What are the different operations that happens? Drying of
Uh,
limestone,
Mm,
yeah, crushing.
yeah. Crushing,
crushing,
mixing,
mixing,
Mhm.
then
packing.
only two operations. Packing, right? Crushing, mixing, packing. So there are some
Yeah.
operations which are taking place. Okay. Now
Mhm.
what I will
Mhm.
do, if we are designing a product, if we are making a product, we have certain raw materials. Let's say raw material 1, raw material 2, raw material 3. So the raw material consumption cost is 80 here.
Mhm.
Convert the raw materials into either an SFG, what all operations that you do, right? Direct costs or conversion cost. Agreed?
Mhm.
Correct.
Then You have expenses like factory rent, right? Indirect materials, etc., which you cannot directly apportion, right? Salaries, accounting department salary, IT department salary, all of this which are there are overheads, right?
Right.
Then you
Right.
have to say to for a 50 kg bag of cement, how much is the overhead per unit overhead, right? Suppose say
Mm-hmm.
you are making cosmetics, let's say shampoo packet, you make an
Mm-hmm.
8 ml sachet, you sell in 60
Right.
ml, you sell in
Mm-hmm.
100 ml, you are selling in 400 ml. And now this is 650 ml also in DMart, right?
Mm-hmm.
So how much of overhead should I charge on that one? Based on quantity, etc. So again, overhead, you will have to charge on those product, right? Now at this level, when you add cost of materials plus conversion cost plus overheads, you get what do you get? You get the cost of production or cost of goods manufactured.
Mm-hmm.
Clear, right?
Yeah.
Right.
But once you keep the goods, can you sell it or do you further you will have to take this stock, send it to the dealer, send it to the distributor, okay, incur some advertisement cost, marketing cost, selling and distribution cost is also there, correct?
Yeah.
Right.
If you add that, you will get cost of goods sold. If you
Mm-hmm.
add profit 70, then
Mm-hmm.
you will get the selling price, right? If
Right.
everything is so easy, then we there is no complex work for us, right? Anybody can do it.
Yeah.
Now let us see the
Yeah. Yeah.
production process. So what does product cost help you in? Product cost helps to understand what is the cost to produce a good, which you already answered, Harish, right? It is
Mm-hmm.
product costing is how much does it cost to make produce a product? What is the cost of goods sold? It will help me understand.
Mm-hmm.
Second, it will help me in understanding what should be the right pricing for our product. Am I competitively priced? Should I lower the
Mm-hmm.
price? If I lower the price, how does it impact my margins, etc.
Right.
Next one, I'll ask you a question. Let us say you are making this cement plant. One, you have a plant in some place called Chhattisgarh or some other remote area.
Mm-hmm.
Then you have
Mm-hmm.
another plant in Chennai, okay, outskirts of Chennai, right?
Mm-hmm.
Now tell me to
Mm-hmm.
produce the same 50 kg bag of OPC cement, will it cost you the same thing across both the plant or will the cost be different?
No, it should
It will
be, it
be
will be
different.
different.
And why would it be different?
It may be various
There's
factor, transportation cost and availability of raw materials.
mm-hmm.
Because
Labor cost.
the raw material pricing may be different in the Chennai and another plant.
Exactly. Cost of raw
And
materials, incurring raw
also
materials can be
labor may be the same case maybe with the labor also.
exactly. That is why we make plant as a valuation area,
Mm-hmm.
Right.
valuating the cost of a product at the plant level. Yesterday, I saw a scenario where they are doing the valuation at company code level, right?
So
So you are
in
doing
those
the
cases,
yeah,
so in those cases, I will have same valuation, right, for every plant.
they don't have plan. They are into service.
Okay,
Okay.
They don't make anything.
Mm-hmm.
okay.
So you are very right. So product costing will help you understand what is the cost of producing the same product, finished good or semi-finished good in plant 1 versus plant B. It also helps you understand should you buy some of those components externally or make it in-house. Do you remember the split valuation? So if you buy from externally some of the semi-finished goods, right? How does it impact? If you make it in-house, is it better? Second, what should be the optimum lot size? Would it be better to produce in large quantities and stock them or make small quantities and have better inventory turnover? What are the various costs going into the product, producing the product? What are the conversion costs, right? What is the labor cost? What is the machine cost, etc.? It will help you understand. Then we have, is there a way to track the price variance of the subcomponents period by period? Okay. This is let's say I start with a standard cost saying that it will cost me, let's say 222.20 for one bag of cement. But in Jan, it costed me 232. Whereas in Feb, it costed me 228. Whereas again in March, it costed me 205. Right? It will, then you can do the forensic investigation into why this variance has happened. Did it happen because of excessive labor or because of increase in labor price? Both are there, right? Was there any material wastage? Did somebody spill over some material, leave some of those raw material and wasted it? Or were there some defective materials which because of which the cost has gone up, right? What exactly resulted why the cost in February became 228, whereas my cost was supposed to be 220? Or if it has become 215, why did it go down? What were those efficiency factors? Unless you study that, how will you get to know, right? These are some of the benefits of using product costing. So here, one liner, product costing is the process of calculating the comprehensive expenses associated with creating or acquiring a product, including direct costs like raw materials, labor, as well as indirect costs such as overhead and administrative expenses. So first, when you bring the goods, let's say you have bought all the raw materials, but you will not use all the raw materials on day one itself, right? At the time of bringing the raw materials itself, you will load so many costs, right? You will load on top of it, right? Freight cost, insurance cost, loading cost, taxes, handling charges, customs and duties, etc. So that itself is you are inflating your raw material cost. Then when you consume the raw material cost, there should be something that will you calculate the cost of production. Suppose that today my target is to produce, let's say, 3,000 or 30,000 bags of cement. Let's say today's target is produce 30,000 bags of cement. Now, I need some cost collector which will accumulate costs of raw materials that is issued against that cost collector. That is what I call it here, production order. In this example, it is production order. Again, we have discrete manufacturing, repetitive manufacturing, make to order, make to stock, but I don't want to complicate those things here. But as at this level, you are seeing not conversion code. I have an collector here, which is called production order. I will give one production order number. So let's say production order number 10023. Against 10023, what I will say, how much of raw materials I have issued. I have issued whatever raw materials you have said until now, right? Limestone, etc. Let's say so many kgs of limestone I have issued at X price, right? Then it goes into crushing, then mixing, then packing, etc. Right? Crushing, mixing, packing. So each of these operations are carried out in step processes are carried out in something called work center. Each of these processes are carried out in a place called work center. That work center can be a group of people, it can be a machine, it can be anything. Let us say I am making leather products, right? I will bring animal skins. Okay, first that process is called sheaving, right? Then I will do the drying, then I will wash it properly, again I will do drying. Each activity is called operations. Each operation is carried out in something called a work center. Very clear? Can
Yeah.
somebody repeat that line? Each activity is carried out in a work center.
The
Anybody can
process
repeat.
process of making a
Yes.
product, breaking it down.
Yeah, but each process is carried in a work center.
Yeah.
Right? Right. All the processes put together is called routing. All the processes put together is called routing.
Route.
So if I the converse of the statement is routing is all the processes to make the raw material into a desired output. It could be a semi-finished good, it could be a finished good, right? Routing includes all the operations, right, to be performed to convert your raw materials to your desired output, right? in each work center, as I told you, for example, sugarcane is there. You will bring it, you will wash it, then you will decolorize it, then you will crystallize it, then you will what do you call, pack it. Four different processes are there. All these four different processes. In each of these processes, look at it. When we are doing
Mhm.
washing, right? I will just use labor. I may not use any machine, or I may use machine also. Labor, machine, as well as I will, to operate the machine, I will need electricity. So those are the activities which is being performed. And if you go to work center 2 also, again, there may be a machine, there may not be a machine. So let's say there is a machine, there is a labor, but in process 2, for example, where the decolorizing is happening, the number of labor employed could be just one person just to watch it. But whereas in washing section, they have to remove all these animal skins and put it. So there I have 15 labors. So it need not be uniform. In each work center, the quantity of labor consumption, the quantity of machine processing, the electricity consumption, etc., are very different. It need not be the same, right? Washing is happen, drying. For example, drying, I am doing the natural drying in the sunlight. Do I require any electricity there? I don't require electricity. But whereas if I am operating a machine which requires power consumption, it can go much higher. Again, when it comes to packing, right? If I am doing manual packing, right, then I don't need a machine. So machine cost is not there, but it becomes more labor intensive. So at each work center level, these activities will have its own quantity. We will do the quantification, saying that for one cement bag, to produce one cement bag, how much of labor activity should I consider in work center 1? Again, in work center 2, how much of labor is being expended? So these need not be uniform. Once you finish the conversion cost, then you go ahead and apply overheads, and then you get a cost of goods manufactured. Is this clear what is product costing?
Yes.
Yes.
Okay. So shall we make some production now?
Yeah,
Yeah.
Rajan, one quick question is there. So overhead we used to apply on percentage basis, or there may be some other conditions also. So
There is a
generally, what is the
quantity
trend?
basis
Because it's
also.
a quantity base also, right?
Yeah.
I mean, Rajan, it will be based on business or the products what we prepare, right? It's in some cases it will be percentage, or in some cases it may be rate wise. It depends on, right, the product.
Exactly. Exactly.
Mhm.
It is again business decision. We have to ask them. We can recommend them.
Mhm.
We can advise them what is the best way course of action. Now
Mhm.
you as a product costing consultant should be telling them which will come as part of conversion cost, which should come part
Mhm.
of overheads. There is another technique
Yes.
called template allocation. Then there is something else called splitting structure. All right. How do you bring those costs? You are the person who has to be in control of ensuring that everything that is there in the in P&L expense side should have got charged to your
Mhm.
product. Should have got
When I
charged to
say
your
P&L, then it's common cost, right? In terms of overhead and all, right? Which is not directly allocable.
exactly. How will you bring the cost of internet to each bag of cement?
Mhm.
I am
Right.
making shampoos, soap, leather product, cosmetic, deos. How will I charge my rent on all these products? So product costing does not mean I'll put a raw material cost, conversion cost, etc. The designing takes lot of time, and that is why whichever, for example, in the previous example I told you, distribution channel is being decided by SD. But you should tell them that this is what should be the distribution channel because I am going to link it to my segment, right? What should be their division? Menswear, women's wear, kids wear, or should it be something else? If you can actually, whenever the product is being determined, you can add the division also as part of your profit center. On the fly, you can determine profit center. You can say seventh and eighth digit will be menswear, women's wear, kids wear. So whenever you sell the product, you make sure your divisions are like that. Don't make it based on luxury, masstige, classic. That is not a very important dimension. I wanted to give a balance sheet based on menswear, women's wear, kids wear. So you use division for this purpose, right? Second, where you influence. So some people should not create jail account randomly. It should be based on your cost sheet, how you are seeing cost sheet. So your first comes your primary cost. So you create your RM consumption cost, then SFG consumption cost, raw materials. After that, the direct labor. Then you give a range of accounts for overheads. How those overheads accounts should be there. So you are there involved everywhere, right? If routing is happening, right? What are the processes taking place? PPK cannot determine, should not be allowed to determine whatever he wants. What are the formulas going in there, right? Because your planned activity rate, actual activity rate is directly dependent upon the activities that they will create. Product costing consultant is involved everywhere. The most sought after person. You do COPA, the CFO, CEO, everybody is not no. I mean, I would not say completely they are void of the desire to see a financial balance sheet. Financial report is for external purposes, right? Stakeholders, bankers, investment, everybody else, right? Government, everybody.
Mhm.
But is government interested in what your lipstick has made profit or whether your shampoo packet has made profit? Are they interested?
Mhm.
For
No,
example,
because
Baiju.
this is internal reporting.
Yeah, for example, Baiju Ravindran, will he be interested in whether school academic is generating more profit or is it the 11th and 12th MSET engineering one or the IIT group one or the JEE? He is more interested. Then he is more interested in whether it is Middle East business which is giving him more profit or the India business, which state is giving him more profit, right? So you are involved in everywhere, whether it is enterprise org structure, everywhere. Many people go into greenfield, they will say workshop day one, we will discuss what you call master data. Second, we will discuss processes, how we will do purchase order, Migo, etc. But every time I do my first 2 days workshop for everybody, I make sure everybody sits in. My first question I write on the board is on what objects you wanted P&L and balance sheet. Next time, if you are in a pre-sales and you are giving solution, you are for a greenfield project, this should be your very important construct because everybody in the top management is interested in knowing what is the profit by their line of businesses. It's very important. Correct? Suppose
Yes.
say you have a business team of 10 members working to sell only the cosmetic products, right? Their bonuses comes from their cosmetic products. For example, our own ERP products, right? Packaged business solutions. Like you were saying, you are working in some MNC. So the delivery head of packaged business solution SAP will be interested in knowing what is the profit made from SAP. Correct? But whereas somebody who is operating with let's say cloud-based solutions, success factors, etc., or any of these things, or data platform, insights and analytics, that's a separate team. They are interested in knowing what is the profit from their line of business. So that way, everybody wanted internal report is very important for them. And that is where you, as a product costing consultant, you are all pervasive. There is something called omniscient, omnipresent. Like God, you have to be there everywhere in every discussion. Okay.
Mhm.
Then we will now go into another set of processing. It's called subcontracting. See, there we will able to determine the cost of product. Now look at a scenario where you are just buying the raw materials, okay, and then you are giving it to the entire production to a licensed manufacturer. He will convert into the finished product. Then he will give you the finished product. In this case, you don't have the breakup of what was labor cost. This is a pure buy and sell scenario. Now imagine another scenario where you are saying you will do partial process, right? But some processes your subcontractor will execute. Then how will you do this one, right? Then again, even in this subcontracting scenario, you will be required, you will have to determine the proper costing variant. In costing variant, in subcontracting, you will tell which price it should be picked up. Again, in routing, you will say which processes you will carry internally, what will not be carried out internally. All of these are there, right? Now, look at joint production, right? When you are making products like sugar industry, right? Sugar and molasses, right? Molasses is a byproduct, but whereas this kerosene, petrol, diesel, all these fuels are co-products, right? How will you see the set of raw materials that is going into manufacturing is the same thing, but the end output you are getting 3 or 4 different category of outputs. So how will you apportion the labor to the main product, to the co-product one, to the co-product two, and to the byproduct? How will you do that? So all of it, because the set of cost going in, the inside the production is the same, but output has to be divided. How will it divide? Will it have separate cost estimates? Right? All of these we will look in joint production. This I am skipping for now. What are the tools which help in doing this one, which is not required at this stage? MIS format, not required. So I will now tell you one of the most important secret which right will help you become very successful. Okay, it's called the matching concept. What is the matching concept? I'll go back to Excel. Okay, I should have a balance sheet somewhere, but otherwise I'll construct it. Expense amount. Okay, I am taking quantity here. Okay, this is quantity column. I'm just adding only to make the understanding easier for you. This does not mean that there will be a quantity column in the balance sheet. Do you agree with me? Hello, are you guys there? Are
Yeah,
you all there?
yeah, 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 yeah.
Okay. Sorry, I already had a format. I have to open one more file, which is why I am just directly doing this. There is already a format, KDA sheet, etc. are already there. Okay. Now let's say I'll start doing some production. I'll buy some raw
Mhm,
material. So this is again, this is just a divider. So I'll just put a white here.
mhm.
We'll buy some raw materials. Where will I show the raw materials? What is the journal entry? Debit,
Mm,
Stock.
inventory.
debit.
Yes, stock inventory debit to the other.
Very good. So I will directly, I'll not go to GRIR. I will say trade payables.
Yeah, correct. You can see that.
Finally, right, trade payables. Okay. Let's say I am buying inventory RM, some 2000 units, each one
Mhm,
at 25, each one at 25. So 25 rupees or 125. So how much it became? 2,50,000. So I am buying cost
mhm.
per unit is 125. Okay. Cost per unit is 125. So what is the other side of the entry? Trade payables.
Yes.
Okay. Trade payables is 2,50,000.
Mhm,
Agreed. So
Yeah.
I'll take the total here. So everything should be white, right? Okay. Okay. This is the total. Now we will start consuming it. Okay.
mhm,
Now let's say to make one FG, you require uh, 3 raw materials. You are not able to see it here because I have to make it white. And now we are producing we are producing 200 units of FGs. Okay. Now product costing is a bit of max, so I'm sure, and very basic max. Now tell me, to produce 200 units of FG, how many raw materials I require?
2000
600.
divided by uh,
600
100.
because
To produce one
for
FG,
one
yeah,
FG I need
Uh-huh.
for one
Three,
FG I
three.
need
Yeah,
three, right? So 600.
23.
correct. So what is the entry?
Uh, Consumption debit to inventory.
Very correct. RM consumption,
Yeah,
okay. Then
to inventory.
inventory RM is, this is balance sheet. See, I am writing a PL means P and L. Now it is balance sheet
Correct.
and P and L effect. Okay. So
Mhm.
I will reduce from here minus uh,
600.
600,
600.
and the cost will become 125 into 600. So
75,000.
the
75,000.
75,000. So here RM consumption, how many? 600 units?
600 units and 75,000.
70. Perfect. And you guys agree with me, right?
Yeah.
Now I have incurred certain labor to produce today. I had 5 laborers working 8 hours, 40 hours of labor. 40 hours of labor, let us say per hour, it costed me 300. So 40 into
12,000.
per hour cost is what? 250. Okay. So 10,000. Then machine cost. Machine operated how many hours? 8 hours. To operate 1 hour, it cost me somewhere around 800. So into
Mhm.
800. So let's say other things
6,400.
like, and let's say these two I am taking. If you want, you can take overheads. At this point of time, let me not calculate. See, rent, salary, tax, all of those things are coming later. Okay.
Mhm.
For now, these two cost. So this will go to provision for expenses.
Mhm.
How much? 16,400.
Yes.
Provision for expenses. So debit. What is the debit? Both are P and L,
Uh,
balance sheet,
yes.
debit, again debit,
Right.
credit. So instead of 40, I will say this is more than 40, and 100 hours of labor, and this we will say 8 hours of machine cost. It should be more than 800. Let's say it costed me 1800, something like that. So it became 14,400, right? 14,000. So totally it became how much? 39,400. So
39,400.
39,000,
400.
39,400. So here it goes. Labor,
I
machine,
think one zero
debit
is
is labor.
extra. 10 is extra, sir.
Yeah, yeah, I'll remove it. Machine.
Oh,
Thanks for letting know. Okay,
provision for expenses.
okay. Let me go to meeting and check whether everything is getting recorded. Otherwise, it will be very bad on me. Yeah, it's getting recorded and it is getting shared. So this problem is going to be there only for 2-3 days. Not a problem. I just have to become more familiar with the go-to tool. All right. Okay. Now that 39,400. Now
Mhm.
I have sold, made how much? 200 bags. I have sold 50 bags. Okay. I have sold 50 bags. Let's say here cost is 11.4, right? This is a secret call calculation. 11 by 200. Okay, by 70. So per bag it costs me. Okay, I sold revenue. Now tell me revenue.
Mhm.
I sold 50 bags. Each bag I sold at 1,000. So it will become 50 into 1,000,
Yeah.
right?
Yes.
50 into
Mhm.
1,000. This is the biggest secret I am going to tell you today, how you will be successful. Okay. And you are happy that I will be sharing it in the demo version itself. Okay. Trade receivables. Okay. For 50 units, Again, I'm quoting, you will not have the quantity column, right? It's only for the purpose of making it simplified to understand. I'm doing this. So you have trade receivables worth 50,000. Okay. Now tell me, have you made a profit or have you made loss?
I made profit.
How? I
The
believe
remaining cost,
one of you are from the CA background, right? I know you can answer
me
this.
only.
Yeah,
Yeah,
I would appreciate the other person, Harish and Anvesh, to answer this question. Have we made profit or loss? See, revenue is 50,000,
Yeah.
expense is 1,14,000. So have I made
Mhm.
profit or loss?
So only that was for 600, right? Revenue 50, quantity only we have sold. Uh,
okay, Rajan, it will be profit itself, and rest of the things whatever we have incurred in terms of expenses for the extra quantity that we need to show in under the WIP.
Exactly. So what? Very true. So what happens here is your total 1,14,400 is the cost of
mhm.
manufacturing. We don't know we are going to sell it. We don't, right? At this point of time, we don't know where. So what we will do is that at the end of the day, the production order, we will receive the finished goods. When you receive the finished goods, you have this entry called COGM. Okay, how many units I have made? 200 units, right? For 200 units,
Right.
what is the cost? 1,14,000. So 1,14,000, you will book an entry. Let me book that entry here. Okay, now I'm booking that entry. Debit your inventory finished goods. Debit your inventory finished goods. Okay, credit your COGM is cost of goods manufactured. Okay, so then, so COGM 1,14,000. Here I should write inventory FG 200 units. 200 should be written here. 200 units at the cost of 1,14,000. Correct? Now, when I am selling 50 units, what will happen? My inventory will reduce. Inventory will reduce by 50 units. So what I will
Yes,
do? So cost of inventory side of when I am selling. So the narration is when goods sold. So when you deliver the goods, the entry is debit cost of goods sold,
COGS,
credit
Yes.
inventory,
revenue. No,
inventory. This is the
inventory FG.
inventory
Right.
side of it.
Yeah, right.
Mhm,
Right,
mhm.
right. Inventory FG.
Okay. This is P&L balance sheet.
This is
The
balance sheet.
other entry is again balance sheet P&L. If the customer
Hmm.
pays, it's fine. Otherwise, you will have trade receivables,
Correct.
and this is revenue account,
Revenue.
right? CR
Correct.
DR. So I'll book that entry also now. So inventory, I am selling 50 units. So minus 50. Okay. For and inventory cost of each unit will become how much? Cost of each unit is, this is wrong. So 114 divided by 200.
200.
So
So
570 is the
570.
cost.
Rajan, the
So
cost is
minus
114,400, right? I think 1,14,400 is there.
1,14,400. 400. Acha,
Yeah,
I have given
so I
triple
think
zero. Yeah.
right, right.
1,14,400. So 28,500 is here. 28,500. I have to book it to Cox,
Yes,
right? So Cox is for 50 units, 28,500. Now revenue I am getting. What was the cost we said we will sell? Each one at 1,000, right? So 50,000.
correct.
So
50,000.
trade receivable will be 50,000, right? Now you look at the profit. What you are getting? 1,64,000 minus 1,42,900. So if you say 164, say 142, it is 22. 22 means 21,100 is the profit. 21,100 is the profit. If I take it to return earnings account, if I do not distribute it, so it should tally. My balance sheet should tally. Now, what you are as a cost accountant, you should ensure is that at the end of the month end activities, you are doing all the WIP, settling the product costs, etc. All the costs which are not relevant to generate the revenue should move to balance sheet. All costs which are not relevant to the generation of revenue in that particular month should go to balance sheet. You should inventorize as a work in process inventory or FG inventory, whatever it is. Now the situation will become complicated when you are determining booking the materials as standard price versus moving average price. In case of moving average price, you load the price difference directly to the raw materials. But in case of price difference, you take it to the P&L. Now, if you buy 2000 units of raw material, okay, you are only consuming 600. The 1400, the price difference on account of that 1400 units are lying in your P&L. That is what actual costing ML costing run which you run in the month end, it will properly take these price differences, labor consumption variance. So on account of labor, there are two sets of variance. For example, you are operating machine every day 2 shifts. Some days you can operate 3 shifts. Someday it can operate only on 1 shift also. Only in the end of the month, you will get to know how many shifts you have operated those machines, right? Based on the operation, you will know what is the actual number of labors consumed. Someday you might employ, someday you may employ 8 casual labors. So all the labor consumption or how many hours of machine has been expended, how many hours of electricity has expended. All these informations you are getting to know only at the end of the month finally. So on account of consumption also, you thought that to produce whatever you wanted to produce, the number of units, you only need 8,000 hours of labor. But it can happen that you have ended up producing for the same stock, you have ended up producing, consumed 8,200 hours of labor. In which case it becomes consumption quantity variance. Same way, the labor cost has suddenly gone up because you had to employ certain labors at a bit higher price than what you had planned. Then it becomes the price variance. Now, all these variances which are sitting either in price variance, production variance, they are sitting here in the P&L. If you employ, so better I explain you, give you one more example. That way I'll explain. Suppose say my revenue is 8,000. Revenue is 8,000. Okay, I'll just see. Okay. Now I am slightly giving you a sneak peek of the moving average versus the standard price. Okay. Now say my cost of materials. Okay. COGS. Okay. In the month of January was 5,200. Okay. So the variance is what?
Revenue minus COGS.
2,800.
Right. 2,800. This should ideally be margin. Right. It's not even
And
profit.
this is margin. Basically, this
Sorry,
is margin.
margin. This is margin. This is margin. right? COGS. So let's say that COGS is there, you have certain margin. So next month, I'm just using it as an example. Okay. Then next day month it is 5,600. It costed you 5,600 cost of goods sold. So your margin went to 2,400, right? If you directly load in a moving average price, actually this has to be covered in moving average price. I am trying to explain it here. Okay, there is another session which I will explain this in detail with example. Okay, so if the cost is directly loaded to inventory, for example, the cost is, this is a trading good, right? It is directly loaded to your goods. Can you identify on account of what your price variance or this variance has resulted in this case?
No, Rajan. In that case, we cannot identify.
We cannot identify, right? That is the reason we employ something called standard cost estimate. We employ something called standard cost estimate. Okay, this is now this standard cost estimate. Okay, we have one more column here. Okay, we take standard cost, we'll take variance. Okay, sorry, price difference. Okay, so standard cost of this material is always 5,000 for this year. Okay, but in this month, what has happened? There is a price variance. Okay, now if you see my profit here, you will get the same profit. Okay, now you can tell that because I am applying a standard cost estimate of 5,000 every month, because of price difference of 200 in Jan, my profit is 2,800. My profit went down to 2,400 because prices has increased. Now this I am showing only one row, but in your cost analysis, you will find that this difference is due to price difference due to raw material cost, or is it because of labor cost, or is it because of more number consumed for producing same thing. So this way, by standard cost estimate, you will be able to understand the variance and drivers of variance. Okay, I slightly
So
went to this
basically,
topic.
price
So
difference is based on the quantity and price size both. The
see,
size
I
difference.
price difference is based on input price variance only. If I am agreed to buy something at let's say each unit at 32 rupees and I bought it at 36
Uh,
rupees, so the 4 is variance.
right, right.
Now for
So this
consuming
may be.
this,
Mhm.
yeah, at least. See, here I am producing 50 units of cement bag, right? So,
Right,
sorry,
right,
200 units of cement bag. To produce 200, instead of 600 raw materials, I have consumed 618 because that 18 units were defective, right?
correct.
18 units were additionally consumed or wasted or whatever has happened. That is what input quantity variance.
Yeah, right.
Now
Uses
everything
variance
is fine.
basically.
I used, yeah, let's say I used properly only 200 units, everything is fine. But at the output stage, instead of getting 200 bags, I got only 198 bags of cement. Then it is output quantity variance,
Yield
right?
variance.
In there are 8 or 9 types of variances which we will look into it at a subsequent class, and we will do a
Okay.
deep dive on that one. What each variance is all about. But what I wanted to tell you is that I go into each topic in great detail, very extensive detail. Fair enough?
Rajan, you are covering each and every topic in a very detailed manner. I must appreciate.
Yeah, thank you. So I'll go further deeply. I'll tell you why you are to do a certain logic in certain way. For example, when you begin the beginning of the period, you will have planned quantity, planned rate. You have not even started production. So you will have an estimate, standard cost estimate, where you will say, okay, this is what it is going to cost me to produce 200 bags of cement. This is the quantity of raw material. This is the cost of raw material. Both of these are planned. During the month, okay, you will not have actual rate because salaries, electricity bill, all of this will come during the month end. Okay, so during the month, at the end of the day, I want to know what this production costed me. This particular production order costed me. I will have at the end of the day information of only the quantity. Instead of using 600 kgs of raw material, I use 618, so which is actual quantity. Whereas I will not have actual rate because labor, salary, etc. I will come get it only in the month end. I will compute it with the planned rate, and when the costing is happening, right, along with the production, it is called simultaneous costing, right? And in the end of the month, when I have both, anyhow I have actual quantity, then I will have actual rate information. Then I will compute the actual cost. That is when I will take all these variances and transfer it to the appropriate finished goods. So that is part of actual costing. Now, when I am saying all of this in the session one, you may tend to get confused. But if you have understood my style of teaching, I will go at a very layman way of telling each of these concepts, right? I'll go into threadbare examples with journal entries, with all these calculations. Configurations are important, fine, but why it is being done, how it is linked, which particular setting impacts this one, to those details I'll be going. Ideally, I'm supposed to cover the moving average price as well as the standard price. I will leave it for next session. Next also there will be one more demo session. Iraj, I think you will schedule it. There will be one more demo session for 2.5 hours. I'll cover topic. In case if you are free tomorrow, you can contact Iraj. Uh, is this clear? Whatever I have explained so far, is it clear? I will stop the recording and take your questions.
Rajan, one question from my side. That is, you have told about price variance, standard price, and moving average price, right? So I'm a little bit
Yeah,
confused with these three. Price variance thing you have shown, where the standard price you are comparing it with, and the moving average price, I'm not that much familiar. So
very good. I have another class for that, but do you have some
mm,
time? Another 30 minutes?
yeah, sure.
Okay, let's build that. Let's build the example. The same thing which I went
Mm,
into Excel, we will see both the examples, standard cost as well as
mm,
this one. Okay, this is inventory cost. Okay, now I'll go to standard price versus moving average price.
yeah.
I have not explained. Ideally, I thought I will explain later, but I'm
Mm,
doing it now. Okay, now we will do now moving average price. Today, let's say we are still in August. Okay,
mm,
1/8 August, right? 1st August, I will buy, okay, 5 units at 5,000, 5 units at 5,000. I hope I did not stop the recording. No, I have not stopped. 5 units at 5,000. So was
mm.
it Avnesh who asked me the question or Harish?
Harish, yeah.
Harish, okay. So how much will it 5 units at 5,000 will cost me? If I buy
Uh,
each unit, this is a rate.
mm, mhm.
This is the rate. Okay. Moving average price. Let me just put one more thing here. Okay. This is quantity.
Mm-hmm.
This is the rate. This is amount.
Yeah.
Okay. Now tell me, if I buy each unit at 5,000, how much will 5 units cost me?
25,000.
25,000. Agreed? So
Yeah.
what will be the entry? Debit inventory, credit
Mm-hmm.
trade payable,
Yeah.
right?
Yeah.
So it will be 5 units at 25,000,
Correct.
right?
25.
And trade payables is 25,000.
Mm-hmm.
This is the entry.
Mm-hmm.
Agreed? I am selling each unit at 8,000. Every unit I am selling at 8,000. One unit, 8,000. So what is the entry?
Mm-hmm.
When I sell, there are two sides of the entry. What is
Yeah.
that? One is the inventory side, one is the revenue
Mm-hmm.
side.
Yeah.
In revenue side, what will happen? Debit your customer,
Mm-hmm.
debit your customer, which is trade
Mm-hmm.
receivable. How much I should do
8,000.
now for one unit?
8,
8,000,
8,000.
and revenue is 8,000.
Mm-hmm.
So one unit from my inventory balance sheet will reduce.
Yeah.
What will be the cost of inventory? 5,000,
Yeah.
right?
We
So
sold at
minus
8,000.
5,000.
Yeah.
Yeah, but inventory will reduce by 5,000.
Yeah.
What is the
Correct.
other side of the entry? Debit COGS,
20,000. Mm-hmm.
debit COGS, credit inventory.
Like it calls inventory. Yeah.
Yeah. So now tell me, what is the profit?
4,000. 3,000. Yeah.
How?
3,000.
3,000. 3,000.
Yeah. Yeah.
Right? The profit is 3. Got it?
Yeah.
Clear? Right. Now I did not make this sale. Let's say I did not sell this.
Mm-hmm.
Okay. I did not sell this. Okay. What I did is that I went and bought on 3rd August another 5 units.
Okay.
Another
Okay.
5 units. But this time the
Rate
price
become.
was 5,500.
Okay. Okay.
5,500. What is the entry now for 3rd August?
So
When I buy
same
inventory, what is the entry?
inventory to trade payables.
So 27,500.
Mm-hmm.
I am writing
Correct.
in column V. Can you see?
Yeah.
27,500,
Yeah. Yeah.
right?
Yeah.
So tell me, what is my cumulative stock? Cumulative stock.
So 10,500 will be the rate. Quantity will be 10.
Quantity will be 10. So first
Yeah.
time it will be 5. Next time
Mm-hmm.
it will be 5 plus
5.
5.
Mm-hmm.
Now same thing, if I say what is the cumulative value? Cumulative value of the stock.
52,500.
Mm-hmm.
First, correct. So first time it will be 25,000. Second time it will be
27.
27,500
25,000.
plus,
Right.
Mm-hmm.
What is
yes,
the average price?
52,500.
What is the average price? Cumulative
First
stock
one,
value. Cumulative value by cumulative stock.
Mm-hmm.
correct.
Cumulative value by cumulative stock.
Stock.
That means
Stock,
Yeah.
total stock value by. Okay. What is the price on 3rd August?
5250.
52,500 by,
Mm-hmm.
right? 52,500. So 5,250, right? So what is
Correct.
my total inventory value? 52,500,
Correct.
right? In moving average
Mm-hmm.
price, I will directly book it into the balance sheet inventory material. Okay. Trade payables is 52,500. Stock is 10.
Mm-hmm.
Agreed?
Yeah.
Now on 4th August, you are selling. When 4th
Mm-hmm.
August, you are selling. You are selling 1 unit. Okay. At what
Mhm.
price you will take it? You will take it at the moving average price, 5,250.
Yeah, 5,250, right?
Yes.
So inventory will get reduced by -1.
One. Yeah,
So -1 into, so that will become minus
5,550.
5250, and
Yeah.
COGS is 5250.
Mm-hmm.
Okay. Revenue is 8,000.
Mm-hmm.
Here revenue is 8,000.
Mm-hmm.
So I should have profit here. Okay. This is total. Okay. This is also total. Okay. Now what is my profit? 5,000 minus, sorry, 8,000
8,000
minus
minus
5,000,
5,000.
5250,
250. Mm-hmm.
2750.
Yeah.
But what was our profit previously?
It
3,000.
was 3,000. Yeah.
Now it is 2,750. How come?
Because of the additional rate we have purchased.
Because I bought one stock and told you. Suppose say you have
Mm-hmm.
200 raw materials. How will you know which
Mm-hmm.
material has given you what price impact?
Mm-hmm.
Are you understanding?
Yeah. Yeah.
Now every month you got this price here. Look at it.
Mm-hmm.
Whatever I am highlighting at the red,
Mm-hmm.
in red, whatever I am highlighting, in Jan the price
Cost
was
of.
5,200,
Mm-hmm.
5,600, 5,650, 4,900, right? Now in
Mm-hmm.
moving average price, whatever be the price value, you take it to the inventory directly. Now let me show you the standard method of accounting the same, right? I will show you the standard way of accounting the same. 1, 2, 3, 4, 5, 6, 7, right? Yeah. First time when I buy stock, okay, 25,000 will be here, 5 units, 25,000.
Yeah.
Can you tell me, Harish, which cell are you looking at?
Inventory RM, the second
Cell
tab.
number?
21,
I
L21.
will make this green with a, yeah, very correct. So I'll just make this green with a black font. That way it will be
Okay.
slightly different. Okay. Now we are talking about standard price.
Mm-hmm.
Standard price is, okay. So 25,000.
Mm-hmm.
Second time when I am buying at 5,500, right? I am buying at
Yeah.
5,500. The entry will be slightly different. What it will be? It will be like this. The difference
Okay.
will go to price variance account. Any
Okay.
difference will go to price variance account. So inventory will be 25,000.
Mm-hmm.
2,500 will go to price variance. Trade payables
Okay.
bills will be 2,000. So now
Okay.
25,000 original. Second 25,000 total. It will be how much? 50,000.
50. Yeah.
But to the vendor, okay, don't be under the pressure that you have to understand. It's okay. Even I took a lot of time to understand this when I was learning initially. What is price determination control, etc. If you are not understanding, you can tell. Okay.
Mm-hmm.
Trade payables will be 52,500. Okay. But it will not tally, right? See, you don't have this 2,500 doesn't tally, right? This
Mm-hmm.
2,500 you will book it to price variance account. Price variance will be 2,500. Where is it sitting? Where is it sitting? In the expense side of the
Yeah.
P&L.
Mm-hmm.
Are you sure you are comfortable with this entry?
The below one you are talking about, right, Rajan?
No, that just now, yeah, the
Mm-hmm.
price. Whatever. Oh, sorry, I disturbed the moving average price. My bad, my mistake. So I have to do it here. I'll do it here. So
Okay.
first time you bought 5 units, so it was 25,000,
Mm-hmm.
right? Second time when you bought for 27,500, look at what the
Mm-hmm.
entry will be. The entry will be like this.
Mm-hmm.
Inventory will be showing only the standard price. What is the standard price? Standard price is 5,000.
Yeah.
Standard price is 5,000. So second
Mm-hmm.
time also when you buy 5,000 into 5, inventory will take 25,000.
Okay.
P&L, okay, debit,
Mm-hmm.
price difference account, you will book 2,500.
Okay.
To the vendor, anyhow, you have to pay 27,500.
Mm-hmm.
So this
Mm-hmm.
entry, so now it will be what? You have to pay to the vendor totally 52,500. But what will
Right.
the inventory show? 10 units. What will be the
Mm-hmm.
value of inventory? What will be the value of inventory? 52,000 or 50,000?
52,000. If
50,
we go with
50,000.
50, yeah. Yeah.
Standard price, it will be 50,000.
Mm-hmm.
So the
Price
remaining
variance 50,500.
2,500 will be price difference account.
Okay. Okay. Got it.
And that price difference is due to 5 units. The price
Mm-hmm.
unit is due to 5 units. So 2,500, right? Now I am
Yeah.
selling how many units? 1 unit. So when I sell that 1 unit, inventory will reduce by 1 unit, minus 1.
Yeah. Mm-hmm.
So minus 1 means each unit is standard price is 5,000.
Yeah.
So minus 5,000 here.
Yeah.
Cox is 5,000,
Mm-hmm.
right?
Revenue.
And I am
Yeah.
selling for how much? 8,000.
8,000. Yeah.
And trade receivables is 8,000,
Mm-hmm.
right? So what is the profit now?
500.
Now is that correct?
Uh, yeah.
Is that correct?
Yeah. 500.
Correct. But is the profit correct?
Yeah. Yeah. Correct, Rajan.
If I say you will not get your salary, you will get your salary as a commission on the profit you generate. And if I show you the profit is 500 in this particular account, are you happy? Or is there any
Mm.
mistake?
Because price difference we have considered, so profit should be 3,500. 3,000 in this case also.
You are
So so here
you are very close to
so
being
here
correct. Yeah.
so here PRD is my initiative also. So if I am saving something on by negotiating something from the vendor, that is also my achievement. That is too also
No,
my
no. I
profit
am
as well.
going. You are right. You are right. The point that I am trying to make here is, see, on the P&L, you have price difference for how many units? For 5
5
units.
units.
Five
Yeah, yeah.
units, right?
But what is the secret I told you? You should have only those expenses for in that month for which you have generated revenue. You have generated revenue on how many units?
1 unit.
1 unit.
Then how can you book price difference for 5 units?
So
Correct?
ideally
So
this will be charged to
in the month end, actual costing run that we do, right? ML run that we do, this
it,
variance is removed from here. Okay.
it is settled to the Pepsi.
Yeah, COGM, ML. I think the production variance itself we will do it. It will go and add here. So I am just using this column here, or let me just use it here. So I'll put here. So for 4 units, what is the price variance? 2,000.
2000.
Uh,
So 2,000 will come here, and
mhm.
your inventory, okay, RM for that 2,000 will come here. This is the entry that gets passed in the month end. So now you see what is the profit. It should be
2000, yeah,
2,500.
500. Yeah.
500.
So see, you have got four different profits. Initially, when I did the moving average, it was 3,000. Then when I bought
Mm-hmm.
the second stock, it became 2,750. If I don't remove those price variances, my profit became 500. Then when I ensured that all the price differences are reflecting only for those units which I sold here, then my profit became correct here, 2,500.
Mm-hmm.
Remaining went to trade receivables. Sorry, not trade receivables. What do you call inventory RM? I have taken the cost. Let's say finished good, whatever it is. So in a standard price, what happens? In moving average price, you will not apply a standard cost estimate, right? You will not know what is the reason why you got that variance. Whereas if you go with
Rajan,
standard, yeah,
yeah, sorry to interrupt. This is a two-way of accounting, right? The above one you have showed one, and the below is the this is related to moving price, the accounting.
no, the top one is moving average price.
Okay, okay.
Here it is standard price.
Standard average. Okay, okay. So both will be recorded in our books, or only one we will be following?
Very nice. You can have certain materials. Okay.
Mm-hmm,
For example, you are a car manufacturer. Okay.
mm-hmm,
Do you want to, let's say the cost of a nut and bolt was 1 rupee. Today it is 1 rupee 2 paisa. Do you want to track the 2 paisa?
No.
Or do you
mm-hmm.
want to, track the price variances of only main materials? Suppose say you are using
Only
some grease. Yeah, please tell. Yeah.
Mm-hmm.
so mainly major items for major items we used to have tracking.
Yeah. So the answer to that, Harish, is that
Mm-hmm.
for those materials where you want to track the price variance, you will apply
Mm-hmm.
standard cost estimate. See here the
Okay.
example. See where you are
Mm-hmm.
getting to know variance. This is the moving average price. Wait 1 second.
Yeah.
See in this, let me put the same color, the green color here.
Okay.
Okay, there are two tables, right? One in
Mm-hmm.
let's say I will make it white and black. Okay, I'll make white and black. White with black. Tell me, this is moving average, this is standard cost price, right?
Right.
In these
Right.
two techniques, okay, in these two techniques, where you are able to understand the variance,
The standard cost.
in the green table or the white table?
Green table.
Exactly, right? So I was working for a
Right.
steel factory. They were for a year tracking their variances this way. They are using heavy Excel sheets, etc.
Mm-hmm.
Right? So this is the advantage of standard cost estimate. You will start liking this subject when we start doing the simultaneous costing, when you create a production order, when you try to see these variances coming in, etc. Right? You will start
Mm-hmm.
feeling very empowered. You will start loving the subject. Right? Products which we think are not really making the margin are maybe the ones which are actually contributing to a better profit. Unless you ensure that the overheads etc are going it in a meaningful way, you will never know which products are your high yielding products, right? So this is the crux of entire management accounting, not the moving average price but the cost estimating, product costing as a solution, actual costing etc. So you are a key game changer.
Mm-hmm.
Understood?
So
So
Rajan,
we have an yeah.
on the previous slide we got variance of rupees 2000, right? Which you
uh,
adjusted in the balance sheet, right? In the previous working.
Here
In
Above,
the
yeah.
previous working, this yeah, right. Yeah, this one 2000. So from this
CAGM.
2000, we will be changing this our standard price, or it will be shown as price difference raw material in the balance sheet.
this
So
2000,
what will be the
this two
yes, yes this 2000 on account of price difference we got, right, for the remaining four quantities. So what will be
Correct.
the treatment of this one?
Treatment will
We
be, I forgot, I have executed. In fact, today I have to execute it for last August. It is
Mhm.
COGM ML. You create a separate GL account. Okay.
Mhm.
So one will be on COGM and the other
Mm-hmm.
leg will be for the inventory side. It will get loaded to
Increase
the
decrease,
inventory
right?
side. Sorry.
Is this increase decrease in stock? I am increase decrease in stock.
He's
Increase
asking.
decrease in stock is not the one. It will go to the production variance and price variance. I can check and let you know.
So
I have executed it.
basically we will not change the standard price, right? We will show only like this way, but we will not change the standard price. The standard price will be
That's the good question.
always same.
That that's the good question, right? I really appreciate you asking me. Now, for example, if I change it, my baseline changes. Now, whatever Harish, what he's saying is, look at
Mm-hmm.
another example here.
Yeah.
Okay, what Rishikesh is saying that in the next
Mm-hmm.
month, will I go and change the standard cost price? For example, here itself
Mm-hmm.
I'll say. So let's say the what is the price in for January 5,200?
5,000. Yeah, yeah, yeah.
5,000. So February, will I reset my standard cost estimate to 5,200? If I
Mm-hmm.
do that way, my variance is coming to 400,
Correct.
right? So this is
Mm-hmm.
a very good question. We do not change the, ideally it is not recommended to change the standard cost estimate throughout the year. Okay. I'll give you an
So
example.
that will be set for an year, or what is the duration for the standard cost once we set a standard
That's
cost?
what I'm telling you. Very good
Yeah.
question. Again, I'm
Mm-hmm.
telling you that. In January, my skilled labor, my
Mm-hmm.
skilled labor went on leave due to accident or something like that. Okay. So
Mm-hmm.
instead of him to produce the same material, I had to employ two laborers.
Mm-hmm.
Right. But February 1st, he returned. February
Mm-hmm.
1st, he returned. Because of this additional cost, my cost of production went up. From
Mm-hmm.
100, it became 112.
Mm-hmm.
Right. Now let's say I'll put this price here. Okay. Cost is 100.
Mm-hmm.
But actual cost is, let's say this is planned cost. This is actual cost. Okay. In Jan, it costed me 112. Okay. Now, when February starts, I can say, I can take this 112 as the standard cost.
Okay.
Instead of planned cost, I will say standard cost. Okay. Okay. I can reset the price in the material master. I'll say 112. Actual cost became 113. So what is the variance? What is the
So
variance?
112 and here 112.
Now 1 rupees only for the Feb.
Yeah.
January, my key employee, skilled, very important skilled labor, he was on leave. February, he came back, right?
Mm-hmm.
February, he came back. So that reason is no longer valid.
Mm-hmm.
So if I use 112, if that is not the variance, right? Are you understanding? That labor came
Yeah,
back.
yeah.
So I had dropped the two labor. Instead of employing one labor, I employed two labor in January because my important labor who is very skilled, he went on leave. But in
Mm-hmm.
February, if I make it as 112, the variance is 1.
Mm-hmm.
But if I make that, no, my cost should be 100 only, right?
Mm-hmm.
February, my cost should be, standard cost estimate should be 100 only, right?
Okay.
But
Okay.
now the actual cost became 115, let's say 105.
Okay.
But my labor is there. Why are you getting this 15 variance?
Mm-hmm.
You will say, I got 15 variance because my material became defective. We have
Mm-hmm.
entered into the contract with our vendor. The vendor has increased the price. There was vendor price increase. Some materials became defective. Okay, so there was a usage variance. Electricity cost went up. Now, if I reset this price as 112, I will not know what is the variance.
Right.
I will not know what is the variance. That is the reason we have to say my standard price remains same at least for a period of time. Now
Okay.
imagine, your key raw material price was 30 rupees, but now the vendor has changed the price to 38 rupees, right? So there is an increase of 8 rupees. Now this, because of this, every month you will get variance, right? It's not like your
Yeah.
labor became absent only one off time you are getting variance. So if a variance, the driver of variance is persistent in nature, right? You know that from hereafter your vendor is going to give only a 38 rupees, right? He is not going to reduce. There is an increase. So you know that this variance is established. Then you go and update the material master with the new cost of production. Are you understanding?
Yeah, yeah.
What we are saying is when you know that the variance is going to hit you every month, right?
Constant, yeah.
It is no
Yeah.
longer, it is actually a cost now. It's going to be a revised cost for you,
Yeah, yeah, yeah.
correct? If the variance is a one-off thing, it makes it don't disturb the standard cost. Okay. If the variance is persistent in nature, known, agreed, accepted, and it is going to remain. For example, your all the salaries are increasing, right? Every month, every year, first of the April, they increase the salary. Then what they will do, based on these salary computations, they will understand the impact and they will say they will update all the revise the standard cost estimate. Whatever is the calculation is there at the end of March, they will apply it. Got it? They will apply it
Yeah.
onto the finished product because that variance is going to remain continuously in the future. Is it clear?
Yeah, got it. Got it, Rajan.
So Rajan, is this standard cost of the material, is this related to our version 0, what we used to create at the time of controlling? So version 0, version 1 we used to create, right? So it is basically my original budget, whatever I have planned at the time of creation of my budget. So in that, if I plan something for material consumption, so basically this one related to that only or something else?
Okay. So for material consumption, it is not based on version, it is based on the price, moving average and standard price, right? The version is applicable for your consumption, sorry, conversion activities. For example, planned activity rate, whatever is the cost planning 0 version, that will be applicable. With respect to materials, it is always the material price, standard price or moving average price. But it is for the planned activities where you maintain the planned quantities. Yearly once you do that as part of your annual operating plan, what is going to be my labor cost, cost center, etc., which you maintain, that planning is made against the version 0, right? And
Right.
your costing variant is also mapped against that is 0. There you will get,
Correct.
so 0 will be applicable for only the conversion activities, not the material activities.
But in my plan, in my plan version, I also used to plan for the quantities of the sales, what I will be getting going to sell, right? So on the basis of my sale quantity, if I have detail of input and output parameter, that what is the ratio of material to be consumed, so I can derive the material to be consumed for the production, right? So I
There
could
are
have
four
get
things which you
I have
must.
So what I
So in
want to
your,
say
yeah, go
that
ahead.
on that basis I will get the idea of raw material what could have been for the selling of the, let's say I have taken example of why I will say sell 1,000 bags cement bags for the year. So if I have everything, I mean, if I am procuring the goods and I am producing the cement, so I will have all ideas, right? What are the key material for the producing cement and all. So accordingly, I can draft the P&L statement, and I could get the everything, like what will be my cement production or what will be my raw material consumption. So the breakup of the that I can update under the standard cost, right? Or it will be done slightly different.
Let's repeat the question. So let's repeat the question. You will see the beauty of it. Okay. So for in this question you said, okay, first one is the ratio of mixing of materials, right?
Right.
This is one aspect you touched. What is the second aspect you touched? Ratio of mixing. What is the another aspect you touched? You said what
So
will be the cost of
I said
producing the raw material?
correct.
Yeah, tell me. What is the cost of producing the FG or SFG,
Right.
right?
And how and what
Then,
will be I selling
okay,
the sales quantity, basically sales quantity and sales
at
price. So
at what
so
price
so accordingly,
we will be selling,
hmm, and
right?
what quantity I will.
Now we'll write your original question. Okay, your original question was what version will be maintained, right?
I
This
mean,
was your base question.
so I want to just link this standard costing formula or the detail with the version, and how I want to link this. So I will have sales quantity, right? So on that basis, I will come to know that what I am going to produce, and on that basis, if I have production plan, then I will also have the raw material requirement on the basis of mixing and all. So when I have all the details, so I can have the budgeted cost or standard cost also. So
Now
on
the
that
next
basis,
point.
I want to link this one, version and standard cost.
One second. Now you are saying your sale order triggers the production.
Correct.
Okay. Then you are asking, okay, which cost version will be considered, whether planned or
Budgeted.
right, correct. Now
Yes.
we'll go back to what answer I gave. Okay. Materials, you have only two methods, standard cost or moving average.
Right.
Yeah.
Okay. Now actually you are going to the topic of costing variant. Material also have other
Right.
prices called planned price 1, planned price 2, planned price 3, inventory price 1, inventory price 2, commercial price, tax price. So you have 7 or 8 prices which you can maintain in the material master. Where
Okay.
I am not maintaining any version, when I
Right.
am not
I'm not
maintaining any
maintaining
version,
anything.
right? So the version, now you will agree that the version is not relevant to materials, right? Now let's come
Right.
to, yeah, right. Now your sale order will trigger the production order. That is the sale production order by sale order. That is a known scenario. Who is triggering it doesn't matter. Make to order scenario, make to stock scenario. Whether you are directly creating for make to stock, you don't need a sale order, right? Let's now what when where is the version coming into, right? Budgeting is completely a different topic. What you budget is a different topic. Let us say you have 3 or 4 different annual operating plans which you made and you refined over a period of time, right? Whatever you
Okay.
refine in SAP, you have only one main version which is called zero. Zero is
Zero.
the
Right.
version. So let us
Yes.
say you will say the labor one is activity, planned activity. Okay. Jan, Feb, March. I'm not writing for everything. labor activity for Jan, Feb, March, let's say in plant 1, it is done at cost center level. So I'll do cost center level. Cost center 1 is 3,200 hours, 3,300 hours, 3,100, 150 hours. Let's say this is what you have planned quantity. This is maintained in KP26 and
Right.
this is always maintained in version 0.
Right. We are maintaining also zero.
Okay, right. Now let us look at the other thing. You also maintained this is quantity there, right? Now in KP06, you will maintain for these same things. You will maintain KP06. You maintain, where am I? You will maintain the cost. Okay. Let's say you maintain 9 into some 100. I'll make into some 250 or something into 250. Okay. Something like this you have maintained 8 lakh, 8 lakh 25,000, 7 lakh 87,500 you have maintained. What is this?
Mm.
This is the planned cost, right? One of the
Correct.
biggest challenge that we have is to get this quantity. Cost we will get from finance team because last year's balance sheet they will take and they will extrapolate some inflation factor and they will give you the KP06.
Mhm.
Now
Right.
for you, what is your per hour rate for January, February? What is your per hour rate?
8
Is it?
lakh
8
divided
lakh
by
divided by
2,200.
33,200. I think
I'll just
you
change some
gave
value. Otherwise, I will
250.
get everywhere some same thing. I'll get everywhere the same thing. So I'll give 7
Right.
lakh
Right.
82,000. Okay. 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 Now tell me in all these questions how the version will be related. Let's just try to understand. The version has nothing to do with the ratio of mixing of raw materials because that you do in CK 91 or 94 or something. You will maintain the mixing ratio.
Hmm.
Okay. So mixing ratio of raw
No.
materials for the same raw material, it is a different thing. For example, if I am mixing ratio of a import of the same raw material is 30, 70, what is the cost? It is completely a different set. It is not version
Okay.
dependent.
Okay. So you want to say that to material we cannot relate with the versions, right? Material cost we
No,
cannot
this is a
correlate
labor
with that.
activity, right? No, I am talking about labor. I am saying that the question on version and its
Hmm.
dependency on whatever you are mixing of raw materials has nothing to do with version.
No, no, no.
No,
I actually, I don't want to say that there is a linkage between the ratio of the mixing with the labor. I was just trying to figure out whether we can calculate the material cost, material standard price or the plant price from the version zero data. So in the
yes,
zero
of course.
in the version zero data, we will have material cost, right? Entire material cost,
One second. Let
consumption
me
of
go
raw
and show
material
it
and
in the
all.
system to you. Let me just go and show it in the system for you.
If I have detail of version zero for raw material consumed, so on that basis I could have received the data of standard price, right?
No, no. I want to decompose the question. See, most of the time that rule I follow is in my consulting, try
Yeah.
to get into the question more detailedly,
Okay.
right? You remember we started with 11 dimensions. Then
Yeah.
we started
Correct.
asking,
Correct.
why do you want vendor-wise balance sheet? Then they said they want working capital. Then I said, why will you maintain your current assets, current liabilities, bank loan, etc., based on each vendor, right? Only once
Correct.
you get into the detail, we will get to know. So let me just show you. So once again, we will go back to your question and try to break it a further, little more. What is the password? Okay. Now KP 26.
Rajan, you have
Okay.
not shared your screen. I think I'm not getting.
Oh, you're not getting. Now, let me know.
Yeah, it's fine.
Okay. So in controlling area, you see, I will give version 0.
Yeah,
I'll give
this is for KP
version 0.
26, right?
KP
Yeah.
26. So period A,
Okay.
fiscal year 2024. Okay. Or else I'll give 1 to 12. BB 10 GB 001. So activity type is B10. I'll give all the activities 101 to B106. And you will get only till B104. Okay. So this is activities quantity. When I say quantity, Harish, here is labor how many
Hmm.
hours. For example, from 1 to 12, the B101 is for labor. Okay. 102 is machine. 103 is
Okay.
power. 104 is fuel. Okay. So
Okay. Okay.
we are saying for entire year of B101, 36,000 hours of labor we have planned. See, the unit of dimension is hour.
Yeah.
Whereas
Hour. Okay.
electricity is 15,000 units
Watts.
kilowatts. So if you want to see by month, you can go here.
Okay. Okay.
Okay. So now coming back to your question, Rishikesh, you see these quantities are assigned to version 0,
Right.
Mm-hmm.
and
Right.
this version you maintain in SIMG costing version. Cost center accounting, not cost center accounting, controlling, general accounting. Okay, general accounting organization. Okay, costing version. Here it should be there. Can you see maintain
Define
versions?
version. Right.
Okay.
Okay, maintain versions. See this 0 version here.
Right.
Only for 0 version you can maintain plan. Okay. Then I'll show in the controlling areas, my controlling area. So this, see, only 0 version is there. 0 version settings for each fiscal year. In fiscal year, if I go to 2024, okay, version for location 0. Plan or actual version is what? 0. It cannot facilitate multiple versions.
Okay.
Okay. Against this only, we are booking all the planned quantities and planned rates. Now, these versions that you see GV, PV, more than one version, this comes in multi-valuation. It comes in multi-valuation. Now look here, define ledger for CO version. Okay. In ledger, my B100, I have 0 version and I can assign only one ledger against one version. Against one version, I can assign only one ledger. Again, I don't want to complicate this because some of you are at a bit advanced in your learning curve. Some of them are at the earlier stage of the learning curve. So I don't want to make it a muddled thing here. But having said that, the question has been posed, so I am answering. So B100 0 you have. Now I'll show you another version. This is multi-valuation. In multi-valuation, for the same ledger, I have assigned group valuation and profit center valuation. But again, if you see, the planning can happen only in the main version, 0 version. Okay. Understood, Rishikesh?
Yeah.
Hello.
Yes, Rajan.
If you have a different thought, please do share. I welcome learning from also. Otherwise, we will look at the second question. Now, there was one more thing, right, which I had to show you, mixing ratio, CK 91 or 94. 94, I believe. Okay, 94. For which material I don't remember now. Split valuation versus cash, old versus new raw material. It should be local versus some. Let's see split valuation 2. I don't even remember the plant. Should be that? It can be BB10, BB10 or BB20. So there is a quantity structure which we have to give QTST. I don't know if I have maintained the. This is the material.
Rajan, we can ignore because it's already too late. To
So the things which I
10:33.
have
We planned
taught
for
in
only 3 hours.
the remember which.
We planned only
Yeah,
for
yeah.
2 hours, so it will be better if we can conclude.
Yeah.
Yes,
Fine.
do you
But
have any query for
No. Anyhow,
yeah,
tomorrow,
yeah. We
if
are
you are meeting, we can. Yeah.
tomorrow? Or you want another session, Harish, for product portion?
tomorrow will also be another interesting session like this, the demo.
Yeah.
Rajan, first of all, let me tell
Yeah.
you. Actually, I have already,
I'll
I really
explain
liked,
preliminary costing, etc.